You're not buying insurance to save money. You're buying insurance so that when something terrible happens, you have confidence that the policy that was set up is going to respond the way you expect it to. And the people that you chose are going to do what you expect them to do when the proverbial shit hits the fan.
Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Brian Driscoll, and I'm here with James Jenkins. What's going on, James?
Hey, man, thanks for having me.
Thanks for
ready
coming
to chop
on.
it up with you.
Yeah, likewise. All right, so today we're going to talk about insurance. I know everyone's like, oh boy, the exciting topic of
most
insurance.
exciting topic ever, right?
Yeah, but what's interesting is, James, I told you I come from an insurance background. I did more in like the commercial lines and property casualty, life accident, health, all that stuff. Basically, I dealt with like the normal people that wanted autos and homes, things like that. And you play more in the space, specifically dealing with real estate investors and commercial insurance, right?
Yeah, that's 100% of what we do, actually, Brian. We sold our personal insurance book of business, all the home and personal auto and boats and RVs and whatnot, back in 2023. So as of that time, we're 100% focused on serving investors and businesses.
Cool. So, hey, James, why don't you give everyone a little bit of background? Like, how'd you even get into this space and what all do you do? I know you touched on it there, but like a little bit.
You know, it all started when I was about 6 years old. For Christmas, I got an insurance agent doll. And at that point, you know, I just grew up wanting to be an insurance man. No, no, not at all. I was in corporate America. I worked for AT&T doing sales and customer service in a call center environment. And just hated life. It was miserable. My wife said, you need to be your own boss. You know, you need to figure out how to be an entrepreneur and do things yourself. Otherwise, you're never going to be happy. You're going to be blaming somebody else for your whole career. And that was 2012. And now, you know, 13 years later, we're all the way into the insurance and risk management game. I like to tell people I'm ruined. I would make a terrible employee at this point. I make a pretty good business owner, a good entrepreneur, good leader of a team, but I'm unhireable, unfortunately. So yeah, my team is located here in McKinney, Texas. We serve 30 something states currently. We'll be 50 states by the end of the year, just based on some relationships that have popped up in recent weeks, mostly with transaction coordinators on the real estate side of things. And we got plugged in with a network of TCs. So we basically have to be a 50 state operation to serve them well. So for your listeners out there, wherever you happen to find yourself, RiskWell can help you out for sure.
Nice. So, I mean, what I think is interesting is there aren't many agents that specialize in real estate investors, right? And the reason is real estate investors have wonky things going on, like sub-2 properties, for example, or flipping houses. Like, what are some of the things you see that most investors might not even know to bring up their insurance person or even know they got gaps?
You know, the property side of things, believe it or not, is a little bit more straightforward than the casualty side of things. When investors call us, they're almost always calling us with something related to the property portion of their insurance. You know, theft and vandalism, wind and hail, fire, water, etc. You know, satisfying a lender requirement of some kind. Most people, when they think about real estate investor insurance, they think about the property side. And what we've found is most of the gotchas are on the casualty side. It's things you don't really think about, like discharge of a firearm, assault and battery limits or exclusions. You know, what happens if an animal that has never had a bite history, you know, one of your tenants has an animal with no bite history that attacks someone and you get sued, and you find out, oh my gosh, there's an animal bite exclusion on my policy, even if there's no history of bites. You know, a lot of these kind of gotchas are in the policy, but folks they aren't vetting the agents they work with. They're not making the agent prove that they're a legitimate expert before you choose to do business with them. That's problem number one for sure. You know, everybody should have higher expectations of the professionals that you hire, from lead generation vendors like what you've got there. You know, Brian obviously is about as good as anybody else in the lead gen space for real estate investors, but you know, accountants and bankers and financial advisors and attorneys and, you know, transaction coordinators and title officers, like, just expect more from the people that are advising you. But secondarily, like, you get to outsource the expertise to the people that you hire, but you still got to pay a little bit of attention. The number of folks that we talk to, and we talk to a few thousand investors a year, they simply put zero effort into due diligence of their insurance program. They just put the entire responsibility on the agent that you hired, and you just turn off your brain. And I think you get to do that after a little tiny bit of effort, but you have to put a little bit of effort in before you can turn over the whole process to the advisor that you hired.
Yeah, that makes sense too. And especially, you're right, because you hire someone, do your properties, they slap together just a regular policy for you, don't ask you any questions, don't know your situation, and you never find out until there's a claim. That's the thing with insurance. It's like, you never know you have a problem until you need it.
Yeah. Well, and just as a generic piece of advice, I would just let everybody, all your listeners out there, think about it this way. The fewer the number of questions that your advisor is asking you, the less customized the solution is for your operation. And, if we have a discovery process, it usually takes, 10 or 15 minutes for the simple stuff, maybe longer, 20 or 30 minutes for the more complicated stuff. You got a portfolio, you got some creative financing or different asset classes or whatever. Discovery is going to take longer than 15 minutes, but we go out of our way to make sure that whatever it is that you're doing is reflected in your insurance program. A lot of folks, want to ask, hey, does my insurance cover X? Because you have a plan to do something and you want to make sure that your insurance covers it. I think it's the other way around. You need to be asking, well, this is my operation, insurance person, make sure that my insurance covers what I intend to do. Because if you're trying to mold what you intend to do to what insurance covers, well, your insurance might be a limiting factor. You may have to pass on a deal because you don't have the right insurance solutions in place. Whereas if you have the right agent who's asking the right questions, they can craft the insurance program to whatever your operation needs it to be. Anything interesting that you're into, asset class, creative, financing, different use cases, the insurance program should be molding to your operation. If you find yourself molding your operation to your insurance program, that should be a red flag in my mind.
Yeah, so that is interesting too. Yeah, because you should almost be being interviewed to see like, hey, what's your business even do?
Yeah.
Like on the investor side, it's like, hey, what do you guys do? Because I know some clients are doing novations, some clients are doing flipping, some clients doing stuff too, some they're listing, all kinds of different things. Each one comes with its own set of risks.
It really does. And, it's a lot of people are resistant to spending any amount of effort talking to a vendor before you just cut the vendor. It's like, hey, I want your punch list. Send me the docs you need. I'll send you the stuff. Just give me a quote. Just give me a quote. Just give me a quote. Like the number of times we hear someone say, just give me a quote. It's like, okay, I mean, we could do that if you want, but you can do that with just about anybody. Like, why in the world would you just jump straight to the transactional side of things? Too many folks don't think about their insurance relationship in the same context that they do with the other professional advisors. Like I mentioned just a minute ago, the accountant, the banker, the financial advisor, the attorney, or whatever. Your insurance agent, if you have the right one, can do a lot of advisory stuff, can do a lot of problem solving and situational stuff and being tactical and strategic with you, just like your accountant can for tax issues, like your attorney can for legal issues. If you choose them, if you let them. Now, if you just care about the transaction, you just want a cheap quote and slap it over, to the lender and make everybody happy, check the box and move on. You don't need RiskWell for starters, and you probably won't find any real value in us. You can go down the street and find 5 different agents within 5 minutes of where you're sitting right now. They'll be perfectly happy to get you a quote and, get you to say yes and get you out the door and move on to the next thing. But I have a feeling from the conversations that you and I have had, Brian, that most of your listeners are probably a wee bit more sophisticated than that.
Yeah, I think so. And it's interesting you bring that up because when I was doing commercial insurance, every year people would shoot their insurance out for quotes, just to random agents. So, hey, just like you're saying, hey, give me a quote. And when someone sent me a quote like that, some of them wouldn't talk to us. Like, hey, I just want the numbers. And I was always sitting there thinking, I'm like, I can definitely beat your numbers if you want quotes on whatever you want, but I don't know your business. So it's like, is that number one, do you have the right policy we're even quoting against?
Yep.
And then if you do have the right policy, like what other endorsements are out there that you may want, things like that. So anyone listening, it is important to just not shoot them out and look at the numbers because your policy might have been written for you 10 years ago with what your needs were 10 years ago. You have different needs today. And you're quoting 10-year-old, like when you just started the business.
The way that we always recommend people approach the entire process is pick your agent first. Vet the agent. Talk about their experience, their technology stack. What's their customer service like? Do they have a client portal? Do they have the proper staffing in their office? Staffing is a huge, huge, huge thing for us. RiskWell writes probably 175 to 200 new properties every month on rinse and repeat. We have 3 full-time professional agents that only work with investors. Real talk, full transparency. If you call RiskWell and you ask for a quote for something real estate related, you're probably not talking to me. You're probably talking to Ashley or Verona or Stephanie. We actually have 2 Stephanies. It's kind of a funny thing. We have to call them by their last name because there's 2 Stephanies and they both spell them with a PH. So there you go. But the expertise of the team, talk to me about the industry. Like, what common problems do you see real estate investors facing when it comes to insurance? Like, interview them and make them prove to you that they deserve to be your advisor, because the policy is completely secondary. The people behind the policy, when it comes time for claims filing, are you ready for the claim to be filed? Have you vetted the agent to get a good sense? Are they going to have your back when it comes time to file a claim because some terrible thing happened? Because that's why you buy insurance, right? You're not buying insurance to save money. You're buying insurance so that when something terrible happens, you have confidence that the policy that was set up is going to respond the way you expect it to, and the people that you chose are going to do what you expect them to do when the proverbial shit hits the fan.
That's a good point too, because I think a lot of people look at insurance is they want to buy the cheapest insurance, not thinking about what it's for. And it's like, when that once in a lifetime claim happens, that's like a life-changing situation, that's when it matters. So if you just went with the agent that doesn't know how to handle the claim or can't push it through, or maybe you don't even have the right coverages because you didn't think your thing through. So anyone listening to it's like, I know a lot of people are like, hey, you know what? I just need to save money on my insurance. I got to shop it every year to see if I can get a cheaper rate. Dive in a little deeper.
Well, yeah. And I think to that point, you really don't have to shop it every year if you pick the right agent and agency, because the right agent, the right agency is going to be providing you a level of service and a level of attentiveness that's going to give you peace of mind and comfort to know that, hey, you know what? If something changes in a big way, well, they have other options for starters, but they understand that maybe it doesn't need to be moved every year, because just like your, cost of living adjustment for, federal benefits, like, I don't know, whatever the things are that you get paid, the thresholds for investing change every year. The cost of real estate goes up and down. There's little market adjustments all the time. Insurance is no different. The rate you pay is largely driven by the loss experience of that carrier in whatever geography we're talking about. That is pretty specific by class of business. So you multifamily folks or you portfolio investors out there, you probably have a bigger need to have this conversation than nothing against the folks that are, onesie twosie investors where, you might be looking for your first deal, or you're listening to this podcast because you have 1 or 2 properties in your portfolio and you want to start, getting more in this year. Those kind of folks, if that's you listening, you don't get a free pass, but it's less important than if you have multifamily or commercial assets, or you've got a portfolio or a high volume flipping operation. You folks out there that are listening that have a lot of expenses in the insurance world, that have a lot of exposure because you have a lot of properties out there. Your benefit to going through this process of due diligence, and I'm not just saying pick RiskWell. There's other good options out there. We don't have the corner on the market by any means, but we're as good as anybody out there that you could talk to. But there are others that are as good as we are. The important thing is you've got to do your due diligence on the front end so that you can check out and not pay any attention after you've confirmed that you have the right people that are managing it for you. Because, last time I checked, you don't read your legal contracts every year. You don't go back and revise your contracts, your default agreements with your subcontractors or your vendor agreements, whatever. You don't revise those but once every 3, 4, 5 years, right? Because you're trusting that your attorney did their job and that they're staying on top of it. The idea of shopping your insurance every year, well, one, that sounds miserable because I buy insurance just like you guys do. That sounds like a great way to waste a bunch of time. So I'm rambling here. Sorry. At the end of the day, pick the people first. Don't pick the product. Pick the people and let them pick the product.
Let me ask you this on the liability side. Real estate investors, what are some things that you've got to see and experience? You're like, boy, I never would have guessed that would have happened. Like the lawsuits that come up or things that people are responsible for in a liability side. Like, I would have never even thought that would happen at all.
What I will just say is tenants do dumb things, but the scary thing is people that tenants bring onto your property do dumber things than tenants. The number of times where the claims story has started with, well, my tenant had a party at the property, or my tenant had people over. And I mean, who the heck knows what's going on if there's a liability claim there? Because third party bodily injury and property damage is what we're talking about. We've had situations where, our investor client calls us because their tenant had a party, someone drank too much and got violent in the front yard and damaged someone's car, damaged someone's car. And it's like, this wasn't even the tenant. This was the friend of a tenant who drank too much and smashed someone's windshield and keyed the car and did $5,000 worth of damage to a relatively nice car, just as an example. The investor did nothing wrong. This wasn't a weather event. This wasn't a theft thing where they left the gate unlocked and someone stole a bunch of stuff out of the backyard. The investor did absolutely nothing wrong. The tenant the investor brought in also did nothing wrong. But at the end of the day, the investor's still holding the bag because they're going to get sued by that person whose car got keyed by the guest of the tenant who drank too much.
Yeah, it's like stuff you wouldn't think about. How about Airbnbs? What do you see on those, and what do you see on the insurance side there?
People have no respect for properties, man. I'm glad my grandfather is no longer with us. He would just be so mad to see the way that the general public treats other people's property in today's world. The folks that, come into your property through Airbnb or VRBO or whatever, and simply don't have an appropriate level of courtesy, or, leave it trashed, or, have parties in the property and there's damage, or, liability things. Again, there's someone in your property from an Airbnb basis. Let's say you're in Broken Bow, Oklahoma, or Gatlinburg, Tennessee, or, any one of these resort kind of areas. You got a lot of exposure to the general public because there's a whole bunch of people either on your premises or in the immediate vicinity of your premises. And each one of those individuals from my world is a threat vector. And we're constantly thinking in terms of, what's the worst that can happen for our client? Okay, well, let's make a list of all the bad things that might happen. And let's rank them in terms of, hey, you know what? This is pretty unlikely to happen, so I'm not really going to buy insurance for this. I'm going to have a cash reserve that's set aside for if this very unfortunate, unlikely thing happens, I'll just absorb it. Someone trashes your fire pit, someone vandalizes something. Those things are unlikely to happen in most parts of the country, but you're not going to file an insurance claim unless it's really bad. And you just go down the list of what's the bad things that might happen and decide along with your agent, if it's RiskWell or somebody else, hey, you know what? If that happens, I'm not going to file a claim for it. I'm just going to handle it out of pocket versus, ooh, man, if that happened, yeah, that one's going to hurt. That's not just a inconvenience on my cash flow, on my financials for this month. That's I'm going to have to dip into reserves in a big way. We're talking a 5-figure or 6-figure check. Obviously, you're going to buy insurance for stuff like that. And just having that conversation to go through the process with someone of, how do you like to run your operation? How do you feel about risk tolerance? Are you the kind of person that's going to try to file a claim for every little thing? Maybe I have some thoughts on why you shouldn't do that. So, just having that conversation of what's the worst that can happen, and then going down the list. And with Airbnb, folks, the list of things that might go wrong is longer than, your fix and flips, your buy and holds, your commercial, your multifamily, your long-term rental portfolio people. Airbnbs are messy. Not as messy as wraps on the sub 2 side of things. Wraps are awful. I hate working with wraps. RiskWell will not work with wraps, by the way. If you're sub 2, if you're novation, if you're lease option, if you're contract for deed, all day long. Traditional seller finance all day long. No problem at all. But if you're trying to do a wrap, man, I got some strong opinions on the wrap thing.
Yeah, big pains.
Ooh, man. From an insurance perspective, it's a really horrible thing because if you get sideways from your wrap note buyer, your insurance agent is completely stuck in the middle because you, as the investor, you're the client of the insurance agent. But guess what? The wrap buyer is also the client of the insurance agent. And you've put them in the middle, which is an impossible spot to be because if you get at odds with your wrap buyer, the insurance agent can't possibly make both of you happy. And both the buyer and the investor have a right to have their insurance agent be thinking about their best interest. And I'm just going to tell you, the wrap buyer is not listening to this podcast. they're a wrap buyer instead of a traditional buyer for a reason. Who knows what the reason is, but for whatever reason, their life choices have gotten them to a place where they're not able to do traditional financing. So they're not listening to this podcast. So I'll just say it very clearly. The investor is always going to have the preference with the insurance agent. And that's why we stopped doing wraps, because we had two situations where the wrap buyer got at odds with the investor and we were stuck in the middle. It had to do with claims payouts and power of attorney and stuff. It was messy situations both times. That's why we won't do it. One of the common questions we get is, hey, can you insure my wrap for my buyer? It's like, no, we will insure anything that you need insured. Your wrap buyer can go somewhere else.
That just made me think too, even having a insurance agent that specializes in this space, just having a conversations about the type of property you're buying. Like, what's the situation? Because if you just go to, like, I don't know, you go online or whatever, and you're like, hey, I'm buying a rental property, here's what it is.
Yep.
And you don't specify, hey, I'm buying this sub 2, or I'm buying this in this situation. You're having a policy when you have a claim might say you misrepresented when you bought it, or you don't have the right policy. You've been paying and wasting your money.
Yeah, and that's one of our very favorite questions in Discovery, Brian, is very simply, hey, tell me about this property. What are you doing here? How'd you get it? How are you looking to dispo it? What's the plan here? Is this a flip? Is it a wholesale? Is it a traditional flip and stick it on the market? Are you going to keep it? Are you going to, short-term rental it? You're going to sub to it? What are we doing here? Because each one of those things impacts the insurance program that we recommend for that property.
Yeah, big time. So I'll ask you this, because we're almost out of time. Say talk directly to the investor. What's one thing that you would tell them if they haven't shopped, or they're the guy that keeps putting the money out every year? Like, what should they be looking at in their current things to be like, you know what, I might have a problem?
I think the two most common things that we find on the actual policy itself, if you just want to pull out your declarations page when we get off listening to this podcast or watching the video feed, look for anything that says basic form cause of loss or broad form cause of loss or actual cash value. If you see actual cash value or ACV on your policy anywhere for the building, for the contents, for the roof, probably not the best option. And if you see basic form cause of loss, run for the hills, because that means there's only 8 perils covered. The most 8 basic things: water, fire, smoke, lightning, vehicle impact, etc. You don't have theft, you don't have vandalism, you don't have collapse, you don't have the snow was too heavy on the roof and it caused a huge problem. You don't have burst water pipe because it froze, which is obviously a real problem now as we record in February, the end of February. So if you're seeing any of those things, what you want to see is special form cause of loss. What you want to see is replacement cost value, not functional replacement cost value, but actual replacement cost value, or RCV. Just as a quick little high level thing, without you even having to contact an agent, look through your policy. Make sure you've got special form cause of loss and replacement cost value across the board. Because if you see ACV, actual cash value, and if you see basic form cause of loss or broad form cause of loss, yeah, you probably want to double check that. There's probably a better option out there. Now, granted, it's going to cost a little bit more. Sometimes it may cost a little bit more than a little bit more. But at the end of the day, what you're receiving is going to respond how you think it should. Because at the end of the day, you're buying insurance so that when something bad happens, the insurance program that you bought and paid for responds how you think it should. And my job as the agent, RiskWell's job, your agent's job, the other people out there that are trying to win your business, their job is to make sure that your expectations line up with reality come claim time. Everything else is just distraction, honestly, and sales and marketing mumbo jumbo from people that are good at talking to folks and convincing you to buy things.
Yep, I agree. And yeah, there's things, functional replacement cost versus replacement cost. It's different. Words matter.
Well, and it's the difference between the super, super basic granite and the level, like the category E, the level 5 exotic granite that you got, the Carrera marble or whatever, versus the cheap stuff without the cool veining and the colors and whatnot. The stuff that you put in the property may be $150, per square foot. And the stuff that they put on there with functional replacement value may be $60 a square foot. And you say, well, this is not what I got. Well, they're both marble. They're both stone. They're both granite, whatever it happens to be. functional replacement value is not replacement cost value. It's a huge difference.
Yeah, I agree. Hey, James, thanks for coming on. Last question for you. What's the top book you recommend to people?
Ooh, man. Just like that, huh?
Just like that.
The most recent, what's the most recent one? You know what? I'm a biography guy. I really enjoy a good biography. Benjamin Franklin's biography from, oh gosh, what's the guy's name? Walter Isaacson, the author, Walter Isaacson. That biography's fantastic. But yeah, I've been on a Walter Isaacson kick for a while.
He did Steve Jobs too, right?
He did. He did Elon Musk. He did Steve Jobs. He did Albert Einstein, Leonardo da Vinci. Like the guy has put out some amazing biographies.
Yeah. Have you ever listened to Founders?
Yeah. No, that's a great podcast.
Yeah, it's a podcast on bios too.
Yeah.
Cool,
love
man.
that, man.
Hey, James, what's the best way for people to connect with you?
Yeah, you know, the thing right there at the bottom of the screen, right there, you can visit riskwell.com. We're in the middle of a website refresh. So if you click on that link, then you know what? I'll give Brian the link. Go to the show notes, go to the YouTube description below on the video. There'll be a link that you can go to that's direct to a quote landing page, and we'll get you squared away. And literally any asset class, any size portfolio. If you're listening to this podcast, especially if you're a more seasoned, more sophisticated investor, you'll be hard pressed to do better than RiskWell. So thanks for the opportunity, Brian. And for those out there listening, thanks for the consideration. I look forward to talking with you.
Yeah, sure thing. And everyone listening, it's worth a conversation. Yep. Check it out. It's worth a conversation. See what you got. Maybe you're good. Maybe you're not. You never know.
And here's the thing. If your agent's doing a great job and your policy's written the way that it's supposed to be, I'm going to tell you straight up, hey, looks like your agent's doing a good job. If there's not something you're unhappy about with the agent, then maybe stay where you are. Because we're always looking for alignment. We're looking for a problem to solve and some way to deliver increased value. If your agent's doing a great job right now and your policy's written correctly, I'll be the first to tell you.
Cool. Hey, well, thanks for coming on, James. We appreciate you. Said riskwell.com. We'll put a direct link in the show notes. Everyone listening, thanks for listening. Get out there, crush it, close some deals. We'll see you guys.